Okay, welcome everyone. Let's get right into the stock market technical analysis. We're going to go through the general charts and look at individual trade ideas, trying to figure out where things are going. Guys, if you're new, leave me a thumbs up as I go along if you find some value. If you've been following me for a little while, we are moving lower today with a gap down, so that's exactly what we were calling for. Over the last couple days, I was looking for us to top out yesterday, and we have so far, so we're going to examine what's going on. We have Amazon reporting after the bell, so we're going to want to pay attention to that, and a few other things going on. And then also I want to look at the dollar. I'm seeing a breakdown in the dollar today, so that should be good for gold. We're not seeing the move in gold yet, but definitely the breakdown in the dollar. And as I go along, if you guys are interested in learning about this as a skill set, take my stock market technical analysis course, link in the description below. Okay, now let's get into the triple Qs. Gap down today, so there it is. There's the top. I talked about those videos yesterday, how I thought we were pretty much at the top, and I didn't really want to see the markets go much beyond these key levels that we were at. And today in the Qs, because Facebook came out and had bad earnings, gapping down, and so far holding down there. So looking at the hourly chart on triple Qs, you can see we hit that resistance line at 369.50, and that key level there at 369.50, that was former support. We rallied into that support, and so far we're getting rejected with pretty much selling all day today, just about. A little pop in the morning, but they sold right into that. So I think we're heading lower. That's what the chart tells me is going on. And what I would be looking for, obviously I think Amazon's going to move the market. So if Amazon reports and the earnings come out good, maybe they rally it right back up to this 369.50 area. If I had to go one way or the other, I'd say the Amazon earnings are going to come out negative. But again, it's really hard to call that and with any degree of accuracy. The chart tells me that because we hit that resistance and we've now broken down, we could easily start to break down even quicker with these earnings getting out of the way. The other thing is, I noticed as we were rallying, a lot of subscribers are leaving comments saying, I think that's it, the bottom's in, we're going higher. They might be right. You know, we haven't taken out the lows yet down here that we put in back in late January. We haven't taken out those lows. But, you know, the way it works is typically when you're falling, everybody wants to short after you're sold off pretty hard. And as you're rallying, they think it's going to continue to go up. You know, they're just following price trend. You have to kind of flip the script on that and use the charts to help you be your guide, and not, you know, you have to get away from just being a momentum trader, right? That's what momentum traders do. All they do is they just chase price action. So if price is falling, they're shorting, and if price is going up, they're selling. The method that I'm teaching is a little bit more of a contrarian method, where you're going to look for tops and bottoms. All right, and we're going to use technical indicators and the momentum indicators to tell us that where the probabilities lie of a top. So far, we're breaking down. So at this point in time, I think we're set up to actually move all the way down to this 325.90 area. And that would be just a projection of this flag pattern. So you have a flag pole, you got the flag, and then, you know, something like that, setting us up to move down to, you know, and we also have some support. It looks like that target, the projected target's coming in right about there at 316.50. So somewhere right in there is where this flag pole is projecting us to go. We'll see what Amazon comes out with. Looking at the SPY. So the SPY, we ran up, we popped. Let me go to the hourly chart here. We popped right into that resistance level, which is about 454 area. For anywhere from 450 to 454, popped into there, rallied. So far getting rejected, falling back down within this flag. Still holding it right at 450. So we're at support right here. We'll see what Amazon, you know, Amazon's likely going to move this market, whether it's up or down, I don't know. Again, I'm just going off of what the Qs was showing me. It looks like the Qs wants to go lower, but so far we're holding. Now, if we do reject, then this move right here was literally just that stop rate. And that's what I talked about. In the video yesterday, I said, okay, the move, I don't really want to see the market go any higher from where we're at. This looks like a stop rate, and if we move any higher, then I'm probably wrong. And again, that's how it's always going to come down. You're always going to get to those key levels, and then right at those key levels is where you find out you're either right or wrong. And that's oftentimes where we're trying to get positioned as well, is right on the key level. So that if you're wrong small, and if you're right, you're positioned at key entry points. Okay, I do think we're going to sell off after the Amazon earnings come out. Again, it's a micro call, but that's what the chart tells me. And likely heading lower. We're going to watch for these lows down here. We'll probably, if we're going to sell off impulsively, then we could, well, we won't move that much, but we could probably head down to this flag here at about 438 and start to work our way lower. Okay, I want to flip over to the dollar, and then we'll look at gold real quick. The dollar on the DXY, if you look at the daily chart, we've been in this upward price channel, really starting back in May of 2021. We had a brief little breakout here, and again, we made a new high just recently in the last couple days on this rally, made a new high. This high, and I talked about it, was a divergent high. See the negative divergence? See how we're just dropping off in momentum while we made a new higher high in price? This divergence is a leading indicator that we're likely about to reverse trend. Okay, now we look for a break of trendline support. And here's your trendline support right there. You can see all the tags of that. We had one brief breakdown and they recovered it. And what I said is I think the next breakdown is going to be the one that sticks. There it is today. All right, unless they can snap this thing back up by the end of the day, then we have a sell signal in the dollar, which should be a buy signal in gold. A little bit of support right here on the dollar at 90, on the DXY at 94.65. You can see that was some former resistance right here, kind of former support right in this area, resistance right in this area, support right here. So, we're probably going to head right down there and get a bounce, and then we'll want to see that go from further downside or further upside in gold. Flipping over to gold. Gold's still in this triangle pattern, so we've been compressing in this pattern, getting kind of coiling, ready for a big breakout move or a breakdown move. We don't know which way it's going to go. This pattern is an indecision pattern, but I think you give a check mark to the upside right now because you're seeing the dollar starting to break down. So what I think is likely going to happen, we could get a brief little flush to the downside, but I think we're likely going to break to the upside. We had bullish divergence on gold. That's been kind of building. This was your last divergent low right here, and everything since then has been kind of this coiling pattern. So I think we're going to be changing direction, and we've been in a downtrend, but recently we've just been kind of going sideways and coiling. All right, so I'm continue to look for that. I continue to look for that breakout and next leg higher in gold. And, we just got to wait for it, but that's really what I see there. Oil. So last night I noticed that the oil futures did break this trend line. So if you roll that on the hourly chart, this is CL oil futures. We've been in this uptrend line, and they did a little false breakdown last night. Broke down, snapped it back and recovered it. Big impulsive recovery and boom, off. That's shorts covering basically is what that is. People that took that breakdown, they're covering. So that is, usually when I see this kind of stuff, it's usually the end of the upside, but pretty impulsive breakout. On the, we have slight negative divergence. It's still there, just barely. So if you see a reversal and a breakdown in oil now, it's probably the real deal. All right, and then we're likely gonna want to put a short on in oil. Oil's been very strong. I'm not shorting it right now, and we had that false breakdown. But if we get the next deal, the real, another breakdown is probably going to be the real deal, and we're going to see oil selling off, and that's likely going to come down with the market. Qualcomm. Want to talk about this one? So today on Qualcomm, you can see they opened this thing, they rallied it up, and it made a new divergent high, and then sold directly off right in that single hour candle, and sold down. This one, looking at the daily chart, we have clear negative divergence. All right, look at the momentum just continuing to drop off on the RSI and the PPO, while we just put in a new divergent high. That's likely going to hold as the high. I don't think we'll get another divergent high. I think that's probably it, and I think we're heading down from here. All right, no real sell signals yet in Qualcomm because we are still kind of within this range. We had one little, this is kind of a false breakdown, but I think that move was probably it. We're going to see selling from here on out. We should trade down to this 153.50 area. That's gap entry. There's a gap right here, so we should trade down here. They'll probably consolidate right in this area, and then I would expect us to move in to fill this gap, whether it comes in the form of a gap down and creating an island cluster top reversal pattern, or we just sell down and fill the gap. Okay, so that's a short-term target, is that gap fill, 139.27, and where we're at right now, that's a move of about almost 24%. So I like that for a near-term target. Again, no real sell signals, but by the time you get a sell signal on this one, it's going to be, pretty much entering the gap. I like it short. I'm short this thing right now, giving it a little bit of room. Okay, let's take a look at PayPal, selling off some more. So again, I talked about how I thought we were probably going to get a little bit more downside after yesterday's big gap down. To me, it's likely stop clearing action. But what I want to point out on this chart is if I roll back on the daily chart, you can see all the way back to 2016, we've got a clear upward price channel. All right, there's COVID. We hit that perfectly. And here's the gap down. Now, as I zoom in, you can see we're just popping below that trend line, So what I'm kind of looking for right now, and this is a long trade setup, not even really a setup yet, but just something to look for. If we sell off a little bit more, and if I look at this hourly chart, I'm looking to start to see bullish divergence show up on the hourly chart. So in order to get that, we're going to need to kind of rally and then maybe sell off a little bit more, start to put in new lower lows in price while momentum starts to build bullish divergence. So it'll look like that. And the RSI could turn up here and start to hold that. So I'm looking for bullish divergence while the price continues to kind of drift lower. And then ultimately my buy signal would be a recovery, going back to the daily chart here, a recovery of this trend line right there marked in blue. All right. If we can recover that after we have some bullish divergence, then that's likely going to be, that will be a sign of a bottom, and we're likely should hold this for a move to the upside. Okay, so that's all I see on that one. I don't have a trade on it right now. I'm just trying to point out what could shape up. Okay, XHB. This is a Home Trust or Home Builders ETF. Just want to point this out for a subscriber. I left them a comment, but go ahead and cover this. So XHB, on your daily chart, you've got this upward trend line. This is coming off like July 2020. Here's your clear upward price channel. One little brief breakdown, but then it kind of recovered. Up here at the high, we started to build bullish or negative divergence. All right, so there's your negative divergence on both momentum indicators. That was a divergent high. And then boom, there's your sell signal. So the sell signal on this one came back on January 5th. And we traded down to the first level of support, which was marked out as right there, 71.15. All right, little rally. We had to bounce off that rally. Starting to turn down again. And again, I think this is going lower. This is your upward price channel. So I think at a minimum down here to 69.42, but a higher, I would say that's a good level of support right down there. And then we break that, we should head down to the next level of support, which is right down here at 65.72. All right, so we've got 69, 69.50 is support, and then 65.72 area is support. Those are key levels to watch for, for continuation to the downside, which is what I think we're getting right now. To me, this looks just like a bear flag, where you have that, you've got the flagpole, something like that, and then you're going to break down and continue that move. And the target right now is about that 65.72. So I'd look for a reaction there that's likely where you're going to find some buyers, and that's a good profit target right now. And Amazon, all right? So Amazon's selling down. It is before earnings, so any kind of move that you see before earnings, you definitely want to take with a grain of salt, because there's, lots can happen after the earnings. Looking at the weekly chart on Amazon, we have now broken the long-term bull market in Amazon that goes back to 2008, okay? And I think actually if I look at Amazon went public back in 97, so there might be another trend line that I could maybe mark out, but we're going to just go off of the Great Recession, kind of this latest bull market. All right, so this, and your top is somewhere right up in here. But the point that I really want to make is this upward price channel that Amazon's been in since the Great Recession in 08. As I zoom in on the weekly chart, you can see big breakdown candle right there. Okay, so we broke down. And then this week we ran up and did a back test, and I'll show you that on the daily. Ran up for a back test, rejected at major resistance because it's the long-term trend line, rejected and gapping down and selling off. Now we have earnings, so maybe they'll rally and do another back test. That's completely possible. Again, unless we are able to recover this, we have a breakdown and a big sell signal in Amazon. We already have the breakdown and sell signal on the weekly chart. Going back to the weekly here, we have the breakdown. And look at the negative divergence that on the weekly chart in Amazon. Huge negative divergence. All of this, every single time we popped up and made a new high, right? Divergent high, divergent high, divergent high. So big negative divergence on the weekly tells me that you're going to anticipate a break of trend, and now we have that. We have that break of trend. So there's your sell signal on Amazon. And on a weekly chart, when you get a sell signal with big negative divergence, it's usually setting up for a bear market, okay? At least a bear market in this stock. And if this stock does go into a bear market, it's very, very probable that you're going to see the tech sector go into a bear market. And if the tech sector goes, because of the weighting that it has in the S&P 500 and those mega cap tech stocks, you're likely going to see a broad-based bear market in the S&P 500. Okay, I'm going to wrap it up here, guys. Leave me a thumbs up on your way out. Check out the course, link in the description below. Great value on that one. I kept it very affordable for all, and I will catch you guys on the next video.